Hi, thanks for tuning in. You're watching Ask BQ, where all your stock market related queries get answered. I'm Smriti Chaudhary, and with me is Mathew. Now, before we begin, I'd like to remind you that you can send in all your questions to our WhatsApp number that's flashing on your screen right now, or you can also send in your queries through YouTube live chat or any of our social media channels. Now, let me introduce you to our guests for today. We have with us Mr. A.K. Prabhakar, Head of Research, IDBI Capital, and Mr. Kunal Rambhia, the founder and fund manager at The Street. Welcome, gentlemen, and thanks for taking the time out. Now, before we jump into the questions, Alex, tell us what The Street is focusing on today.
Well, I'd like to call this segment the focus segment on Ask BQ, and we usually talk about the stocks that are the most talked about in trade today, and that happens to be the IT pack. And that's because overnight you saw Accenture report its latest quarter results, and more important than the results itself was the fact that the guidance for the new year was much lower than expected, and that has proved to be a bit of a disappointment. It has guided for a 2 to 5% growth in the financial year ending August. That is the financial year that it follows, and that compares to an estimate of 4.6% earlier. So as a result of which, the entire IT pack, the Nifty IT pack, is down about 1% in trade, and everything from the likes of Infosys to HCL Tech to LTIMindtree are all losing ground. LTIMindtree down over 2%. So, gentlemen, I'd like to focus on this pack at the start, and good morning to the both of you. Mr. Prabhakar, I'll start with you on the fundamentals first. We've been seeing these news items about the IT pack for a while. Would you say then that the downside on earnings and on price is not yet hit?
Yeah, good morning. See, we need to understand, whatever is happening in the developed nations, everybody knows it, and people on the street are not too bullish on IT. But it is a hope that FY25 or FY26 will be good. So that also is now taking a back seat. FY25 first half, people are expecting that to be also bad. No, FY25 second half should be good. That is where it might lead to. But in many stocks, whatever we are planning, it is in the prices, and you saw a rally and now we have seen a correction. So it is back to normal day. So after very good 2020 to 23, 22, I will say 2 years, now IT has corrected. This pause is always required. So I don't think one has to worry much. But somebody who is buying IT should have it in mind that we had a good time. We will face a bad time, and post which a recovery will come. It might take 1 year or 18 months, but stocks are very attractively priced.
Which, according to you, are the stocks that are attractively priced? And I'll come to Kunal then also on the price expectations for these companies. But which stocks can you accumulate as and when you see the opportunity, Mr. Prabhakar?
See, if you are looking at long term, there is a change in management in Tech Mahindra, which looks attractive if you are looking at 2-3 years. BSoft is something where valuation is very attractive. Now, Newgen is one company we cover, and it has doubled in the last 1.5 years. But we still feel they will grow better than the industry. So Newgen is one more stock we like.
Any view, Kunal, on the charts of these companies? All of the frontline companies seeing cuts today, and a lot's been said about the mid-cap companies as well. So which, according to you, are showing some promise based on what you're seeing?
Hi, Alex. Very good morning. Good morning to everyone. So if you look at the overall IT pack, as Prabhakar sir rightly mentioned, there were bad times and the indices, I'm talking about the Nifty IT index, which came down by almost 33%. And that consolidation and the correction was of almost around 15 months. And from the extreme low levels, we have seen the bounce of around 27%. and now a bit of correction. A typical higher top, higher bottom formation is what I can see on the chart. So again, my view on the IT segment is very much comfortable. Buy on dip is the perfect strategy as of now. On the mid cap front, I don't really foresee any problem coming on the counters, but the best counter which I would like to accumulate at this correction would be emphasis. So if you look at the consolidation and the bounce and the correction right now, the counter has come down by almost 38%, and that seems to be the perfect correction. So emphasis would be the preferred counter as of now among all the IT counters.
Okay. Let's move on to the questions now. The first question is from Anas Ali, and he's asking that Suson Energy he wanted to buy Suson Energy last year, but he wasn't fully convinced. The stock price is quite high now. It's almost in the upper circuit today. So is it a good time to buy the stock right now? What do you say, Mr. Prabhakar?
Suson is a turnaround candidate. They have gone through very tough time in the last 10 years. Recently they have started to make profit. Their order book is very good. But for me, any turnaround candidate, you need to do a lot of study. So that kind of study we have not done. So I would avoid that stock. If somebody wants to buy something in power, I think Tata Power, where they are, in solar and other things, that is a better buy. Now, Suson, where you need to do a lot of study, but because it is a stock below 50 rupees, many of the retail investors like it. But somebody who wants to invest in stocks which is turnaround, you need to know in and out of the company which better at this point of time.
Okay, fair enough. Any comments, Mr. Prabhakar, on the shareholder agreement that ended just a short while back? Any implications of that? Because ultimately the shareholding remains.
Yeah, but I'm not party to the agreement. So I saw in the exchange notification that the agreement is cancelled. So I won't be able to comment on
Okay. Any comments then, Kunal, on the chart, Suson?
So again, Alex, we know this counter has been in limelight in the recent times, and the higher top, higher bottom definitely continues. But if you look at the historical chart from 2012 so far, this counter has failed to surpass 28 to 30 zone. It almost tried 3 to 4 times before this time, and it failed miserably, and it came down significantly. Recently, again, it's near to 26. So 28 to 30 zone is something to watch out for. I think about 28-30 zone, it can surprise in a much bigger way. But for time being, it seems to be like a good level to book out the profit. If someone is holding and wants to continue hold, then the trailing stop loss on the position can be 22.5.
Okay, fantastic. Viewers, just a quick reminder, if you're tuning in on any one of our social media platforms, you can send us a message on the comment section on YouTube or otherwise. And you can also send us questions on the WhatsApp number, which I will request my producer to flash on the screen so that you can save it and send us questions on a regular basis. The next question is coming in from Archit, and he's asking about pharma stocks in particular. In years past, Mr. Prabhakar, we've looked at pharma as a safe haven, relative safe haven, and usually money flows into these counters when the markets are declining. The question from Archit is, can it still be looked at as such, as a hedge, and should it be bought right now?
One has to be very stock specific. You cannot talk about a full sector because there are few headwinds there. But about few days back, Divi's Lab in their exchange notification has said that FDI chief has come to their plant and there was a discussion. And in AP, Divi's Lab is one of the leaders. So if something like China Plus One has to happen, then Divi's will be part of that. Even Dr. Reddy is something to look at. But there are few things where Cipla wants to exit their business, the promoter, and Torrent wants to buy it. But here there is a lot of uncertainty, so I will avoid. But top counters like Sun Pharma, Dr. Reddy, Divi's, these are very good companies to buy. I like Gland Pharma, but there is an election which is likely to come in May, and Gland promoter is a Chinese. Fosun Pharma. So that is why we are not recommending that stock. But business-wise, Gland is a very good business. So post-election, maybe I will look at that company. So there are pockets of value even at current level.
Okay. Thanks. Let's take in the next question. That's from Mr. Amar Kadam. He's asking that he wants to buy into FMCG story. Should he buy DMart, Zomato, Devyani, or anything else? Now, considering that the price benefit is fading because of lower inflation and volumes are weak considering the competition from smaller players, what do you think, Mr. Prabhakar? Should he get into FMCG right now or should he wait?
No, see, no, there is a divided play. No, ITC is one where I see growth, whereas Hindustan Lever will face very tough competition from Reliance because they are getting into many products. So there I'm not so comfortable. But if you take other companies like Nestle, which has unique proportion, so I'm very comfortable there. No, Dabur and Marico, I see some growth there. So it is not evenly distributed. And when it comes to Zomato, they are getting pricing power. So it is a loss-making company. It is a turnaround again. But if the cricket season, which is panning out, if their orders increase, then there can be some momentum there. But these are unique businesses where for me, I don't understand the business. But QSR as a space has been neglected. So I think Devyani and even can be looked at this point of time.
Okay. We've got Netra that's asking a question. Netra points out that they're looking at the infra space. They're a beginner with a long-term view and wondering which stock to invest in. Now, gone are the times, Mr. Prabhakar, in the between the 2010 to 2020 that this was an untouchable space. Things have cleaned up quite significantly since that point. But at the same time, one can be forgiven for being a little bit wary to look at these, because a lot of the projects that you get into are very, very long gestation projects. So how do you choose the right stock to invest in the infrastructure space?
So, after this government has come in the last 9 years, the kind of infra development we have seen in the country, it is remarkable. So now, you see the order book, L&T. So now petrol prices have gone up. So crude prices have gone up, which is L&T is a major beneficiary. So now, if I leave L&T, then NCC is one more company where they have a very good execution and their order is widespread, and valuation wise there is a lot of comfort. So PNC Infra. So if we are looking at infra, then we need to have at least 2-3 years, and NCC and PNC Infra offers a lot of comfort there.
Speaking of infra, I'll add a question of my own. Larsen and Toubro won a very large project, and it was announced today, 7,000 crore in the Mumbai region. And this is an underground tunnel that is being spoken about. Quite exciting, really. Very quickly, Mr. Prabhakar, since this is my own question, what's your view on Larsen and Toubro? It's an all-time high right now. And then Kunal, I'll come to you on the charts.
L&T, the execution skills of L&T is, it is too good to believe, and the way they can do it. ECC country, L&T is a preferred bidder. So we need to understand, it is something different. So it is the top one. That is what I said, L&T. Now Larsen and Toubro. And next is NCC and PNC Infra also have a good capacity.
Okay. Kunal, all-time high today for L&T, that 3,000 mark. How does it look on the charts?
So, Alex, if you look at the recent rally from the end of around May till now, the counter almost gave 50% returns from 2,200 levels to 3,030, 40 kind of levels. And that's been a stellar performance, of course, yes. But at the same time, it seems to be the trend is definitely on. But as of now, risk-reward ratio for a positional trader from this level would be, unfavorable. So I think one should be waiting for a mild correction, say let's near to say 2,800, which seems to be a good support for the counter. One can think of accumulating near 2,800, then the trend would definitely remain on and will have a favorable risk-reward ratio also.
All right. The next question is on email. And the question is on Navin Fluorine, that has been in the news today as well because it's down 14% and it's at a 52-week low after its MD Radhesh Welling resigned. Now the CEO also resigned in August and there's a lot of capex announced by the company. The company has been doing really well even during the COVID period. It did not go under like other companies. So what is your view, Mr. Prabhakar, on Navin Fluorine? Is it a good buy right now, or should we wait for the to see what the company does and how it takes the resignation and how it follows through?
We need to understand management is important part of stock performance. So whenever there is a new management, we normally track, what is his vision, what is that he is going to bring on the table. And this is one person who has made Navin Fluorine to this level. And his resignation is viewed as very negative. And I think it is on 4th or 5th of October. Now we have a con call where Navin Fluorine has said they will clarify many things. So we need to wait for the clarification before we can invest. Because the stock has corrected 20%, it doesn't become a value buy. We need to know what is the roadmap going forward. But we view this as very negative at this point of time. Without getting clarity from the management, we will not go ahead and buy this stock.
Okay, fair point. We've got another question coming in from Netra, and she's asking about Kotak Mahindra Bank at the current level. There is a change of guard that is set to take place. But before I come to you, Mr. Prabhakar, on that, I would like to go to Kunal on the charts for Kotak Mahindra Bank. If I'm not mistaken, Kunal, the entire banking pack has not done very much over the last month. In the September series as well, just about 0.5%, if I'm not mistaken, for Nifty Bank, or less than 1%. What's the view on Kotak Mahindra Bank and, of course, the wider space?
See, Alex, if we zoom out of the chart and see at least 1.5 year performance of all these frontline banks, they have been muted overall. So Kotak Bank is not an exception. Again, you must have seen the counter making the extreme lows near to 1640 and then going up and making the highs of around 1950 to 2000 levels. And it's been in between that particular zone itself. So as of now, it's near to the intermediate support zone, which is around 1730s. You can see today also it's mild positive kind of, but not much to, trade as such. But if someone wants to go ahead with a positional trade, keep the levels of 1640 in mind as a support and 1950 to 2000 as a resistance, and keep trading near to these two levels so that you can have a favorable risk reward ratio. But as of now on charts, there is no formation to immediately buy or sell as such.
All right. Well, that's a view on the technicals, but what about the fundamentals? We've already seen HDFC Bank and the big talking point for the merger, but Kotak Mahindra Bank, I guess the big talking point has to be that change of guard and what the implications of that are. Mr. Prabhakar, would you buy at this point?
If I'm going to take a 5-year, 10-year view, it is a good bank to buy. But, we need to understand after a very long time, there is going to be a change. I think from 95 or 96, Mr. Uday Kotak has been running this show as a NBFC. Later, it was converted into a bank, and we know the kind of growth he has done it. But we don't know who is going to be the new manager. So I would wait. HDFC Bank would be a preferred pick because they are into an aggressive mode where they are expanding every year. 1,500 branches. Last year it was 1,200. This year they have said 1,500. Next year another 1,500. So they are aggressive. When you expand aggressive, 2 years you are not perform. But if you are looking at 5-10 years, then HDFC would be a better pick. But in Kotak Bank, I would like to know who is going to manage the show from here on.
Okay. Moving on, the next question is from Amit Rastogi. This is for you, Mr. Prabhakar. He's asking that what is your long-term outlook on IDFC First Bank? Should he sell the stock and buy IDFC Limited instead?
I would prefer IDFC First Bank. They are doing very good. They said 2025 they have given a roadmap, and as per that roadmap, many things are falling in place. So I think IDFC First will be a preferred bet.
Okay, but I also wanted to talk about the fundamentals of this counter, because we've seen a run up over the last year and a half. I think, Mr. Prabhakar, when we used to speak a while back, we used to talk and wait about and wonder about the potential of this particular stock when it was hovering at around 40, 45 or thereabouts, and saying, okay, its time will come. Its time seems to have come. Is there still value to be found based on the fundamentals, though?
See, now almost it is more than doubled or tripled. So at current level, it becomes very difficult. We need to understand now. So at certain point of time, the move can be very big, but once it takes a pause. So IDFC First Bank, maybe if you are looking at next 1-2 years, it might not create enough space. There are other banks like Federal Bank. There is scope. There are other banks, PSU, Union Bank, or your Bank of Baroda has more space to grow. So if you are looking at price action, then you need to move on. NBFCs are there, which will give better. See, first after this kind of rally, it might take a pause. So if you're a short-term person, 1-2 years, avoid IDFC first.
Okay, fair point. Let's get in Mahima's question then. She's bought 1,000 shares of Fairpoint Organics at a price of 800 rupees each 3 years ago. She's wondering whether to hold or to switch to some other chemical stock. I will ask both a fundamental as well as technical, but first on the charts. What's looking attractive right now? Should she use this opportunity, Kunal, to sell?
Alex, I'm trying to figure out the charts. Meanwhile,
okay, let me go to Mr. Prabhakar. Mr. Prabhakar, headwinds reported in the chemical space earlier in the year. A lot of international players cautioning that growth will be muted going forward, and we saw the impact of that on a few Indian stocks as well. What's your opinion on Fairchem, though?
Fairchem, I know it is a 2,000 crore below market cap stock. We have never tracked it. So I won't be in a position to comment. I think Kunal will be a better person to
Fair
answer.
point. Okay, so before we go to Kunal,
I got the charts.
Okay, but before we go to Kunal, then on the technicals, speak about the companies that you do track in the chemical space, and what are the factors that you're paying attention to? Which are your picks in the space?
Yeah, we track Ami Organic. We like Deepak Nitrate. We like few stock in this space, but our important criteria is whether they can service the Indian company. What is the backward integration they have done? What is the capex they are investing? For example, SRF, the kind of capex every year they are investing, and whenever they get a pricing power, these stocks starts to perform. So that is very important. So there, we like few stocks. Ami Organic, they have a 10-year agreement with a European company, and which is likely to benefit them in next FY25, not this year. So those kind of agreements are something we have to look at. So we like stock, where they can invest, or they have a specialty, which over a period of time it will play out. But as of now, Chinese dumping is there, and that made prices correct. But now that is slowly, reducing, because they were selling below the cost, which is not sustainable. So we are feeling, the chemical space will slowly pick up, but we need to give them time. Another 6 months it will take for the price to stabilize. And higher crude prices is something which is again very negative for chemical.
All right, so there you have it. Coming to you, Kunal, what are the charts showing?
So on the Fairchem, what I can see is the chart actually showing the big bit of correction which happened between August 2022 to say around March 2023 by around 60%. And since then, the counter is actually has been in the sideways consolidation. And if I look at the daily chart, it's showing a good consolidation curve formation, and the volumes are also picking up. So immediate breakout on the chart would be say at around 1380 to 1400 kind of levels. But if one wants to accumulate, then the present level seems to be the perfect level. One can keep the stop loss of around 1050 and start buying this counter on the breakout of 1400. I think we can see the levels of 1700 very soon.
Okay, a couple of last questions, and let's rush through this a little bit because we're running out of time. But gentlemen, a few viewers have just sent in questions. So first is a viewer called Astrofin Tech asking about Mopen Labs. Mr. Prabhakar, do you have a view on this one, and would you suggest a fresh entry?
No, I don't track this.
Kunal, any view on the chart for Mopen Labs?
The trend on the counter is definitely negative, but the immediate breakout is near to around 42. So above 42, one can expect the rally till around 50 levels. But again, the trend is negative, so be a little cautious.
Okay, one last question that I'll take. Netra is asking, amid expectations of higher sugar prices going forward, and the sector has indeed been in the limelight of late, and ahead of an election season, I might add, so you might see sugarcane prices also going up. What should you bear in mind when you're trying to buy sugar counters? Should you buy them, for example? She's looking at Balrampur Chini as well as Praj Industries. Should you buy, hold, or sell at this juncture, Mr. Prabhakar?
Balrampur Chini valuation-wise, it is very attractive. Yes, election is something which can dampen sugar stock. It has been traditional in the last 30 years. But, we need to understand valuation-wise, there is a comfort in Balrampur Chini. So even EID Parry, the valuation is very attractive, and EID Parry holds Coromandel International about 60% stake. So if you calculate that, we are only paying a price for Coromandel, not for EID business. So valuation wise, both these stocks are very comfortable. Praj, at this point, yes, it becomes more attractive.
So you say, sorry, I lost that in the last bit. You're saying that Praj becomes more attractive?
Yeah, more attractive if it corrects 10 to 15%.
Okay, understood. Okay, gentlemen, thank you so much for taking the time, and always a pleasure having both of you. You've answered a lot of questions for us today. And viewers, thank you so much as always for joining us, and hopefully the answers that were provided on this particular segment benefit you, not just today, but in the times to come. We'll be back after the long weekend at the same time, 11:30, to answer all of your stock-related questions. So do join us then. In the meanwhile, stay tuned. Lots more coming up on BQ Prime.